Happy COVID Wednesday. Super glad to be here. We have got a great panel of experts. I think you're going to get a lot out of this. Our chat room is open. I'm going to go over that in a second. I got a couple of items here. Pay attention as we go live and everybody comes on board. I see people are still joining, so I'm going to talk really slow. Just kidding. Okay, this is us. Second stimulus, maximize your benefits. If you look up in the upper left-hand corner of your screen, you're going to see our logo, RA Journals. And it says national event. This is our commitment to you that we really like what we're doing on these webinars, and we're going to keep doing them, but we're not going to let them replace our live events in person. Okay, so once a month or so, we're going to do a national event of national importance. This is one of those. So keep an eye out on your emails for these national events. They're going to be, last month we had one with the top retail people in the country, talked about how to rebuild retail. We've got things coming up on medical, data centers, all that stuff. So that's our national event platform. Today's event brought to you by Wipfli. I'm going to rename their logo, the geniuses at Wipfli, and you're going to know why at the end of this. I want to shout out to today's heroes, firefighters, first responders, teachers, doctors, and anybody who knows anything about PPP, right? So, chink, I can't hear y'all laughing, but you all are heroes. So thank you for joining us. Again, RA Journals, this is us. We have 6 publications, 17 different states. We do about 150 to 200 events a year around those 17 states. Okay, real quick, I got to have you find the lobby. I'm going to stop screen sharing on one screen. This is my daily comedy routine. Watch the old guy try to work his screen share. All right, hold please. I think I got it. All right, this is our virtual lobby. So if you're looking at my screen right now, you probably clicked here to get into this event. There's also a couple of other things here of importance. There's advertisements. There's some articles on related content, and there's upcoming events. So we have a big event coming up tomorrow in 3 different markets. All of them are being kicked off with a 1-hour speech by Dr. Dotzer on what to expect in 2021 economy. But here's the thing I really want to point out to you. We have these great speakers today. If you look below their name, there's a little blue LinkedIn box. You click on that, it will take you to their LinkedIn page. You can connect with them. We can't be face-to-face, and it's a bummer. We're stuck here doing the screen share stuff. But if you go here, at least you can connect with somebody new and meet somebody new and learn from these experts. Okay, back to the PowerPoint. Hold tight with me, please. There we go. Find the lobby. You found it. Okay, below your screen right now is a chat room. That's where you're going to ask questions of the panelists. We have people manning the chat room today, and they'll be there to answer your questions. So go in there and make copious use of it. But there's one important thing I got to remind you. When you start typing in your question, how do I get my second stimulus loan? What bank do I go to? There's a drop-down box. You can either send that to all panelists, one specific panelist, or everybody. I'd really prefer it, and I think everybody watching online would prefer it, if you click on all attendees and panelists so that everybody can get in on that question and get that same question answered. Okay, last few things here real quick. Our YouTube channel, this is where you can see a replay of this. So if you have to log off, if something else going on, you missed something, you want to hear it again, it'll be on our YouTube channel. You can go to YouTube, search RA Journals, you'll find us right away, or we have a link to it on our website, rajournals.com/video replay. All right, here we are, second stimulus, maximize your benefits. I'm gonna introduce these people real quick because I love them and I wanna take the time to do it right. Number 1 person on the list here is Jim Lockhart. I have had the pleasure of, I guess, personal pleasure of being able to work at RA Journals here and still connect with people that I've known for a long time. I've known Jim since the 90s. Jim opened my eyes to tax planning, real estate, and how the two work together. It has opened my eyes, and I built much of my career off that. And I remind him constantly that he's responsible for the most miserable 3 years of my life in law school. Greg Butler, he's a partner with Wipfli. He's going to be our resident genius today. He's done all the research on this. He's already told me some of his canned answers are going to be, guidance isn't out yet, but I know if we push hard enough, he'll give us good answers. Terry Hoover is our partner from Wipfli, who's manning the chat room. Not very often you get to hear from a partner in a CPA firm manning the chat room. So pretty cool. Thanks, Terry, for joining us. And last but not least, Jennifer Wolff. Jennifer is an attorney with Godfrey. And she told us in our prep call that she actually read the law. And I can tell you folks, I logged in and looked at it, and it is the messiest piece of legislation I've ever seen in my life. There are several hundred cross-references to other bills. It's complicated. She's going to help us make sense of it. I'm going to kind of step out of the way and ask a few questions, but let these folks get going. Are we there? Jennifer, Greg, Jim, say hello.
Hello.
Hi, everybody.
Okay, I'm going to put us on gallery view so we can see everybody. If you're watching this online, our numbers are continuing to jump up. It's really cool to see. Just go in and say hello in the chat room too, so that we know you're here. Let's start off with, Greg, let's start with you and just talk in general about PPP1, real quick, where we're at today and why PPP1 got brought up in this new legislation.
Yeah, Todd, and while I'm doing that, maybe if you want to bring up the slides too. So where we're at with PP1 is, prior to the Consolidations Appropriations Act, the funding date for that cut off on August 8th. So for most of the people on the call, they have got their first round of PPP borrowing. They probably likely have spent all the money, and they're in one of two places. Either they have filed their loan forgiveness application, and for a small number that have, maybe they've actually heard back from the SBA already saying, hey, congratulations, we've reviewed your loan forgiveness application and your loan is forgiven in full. But for a lot of people, they're probably in that second category of they've spent all the money, they're in the process of gathering their information, but they haven't submitted their loan forgiveness application. There was still some uncertainties on qualified expenses. Until, as we'll talk about, in this presentation, there was uncertainty how to handle the expenses, and there was uncertainty on how it would integrate with other credits. And as we'll talk about, later on, the nice part of the Consolidated Appropriations Act is it's done a lot of things to address those questions and give us some expansion, along with, the option of getting a second draw under the PPP program, which we'll talk about. So I think Jennifer is going to start us off with maybe talking a little bit about some changes in the covered expenses area.
Yes, so thanks, Greg. So the Consolidated Appropriations Act created the Economic Aid to Hard-Hit Small Businesses, Nonprofits, and Venues Act. And that's the section of the CAA that includes the changes to the PPP. As I'm sure everyone is aware, originally covered costs include payroll expenses, mortgage interest, rent, utilities. The CAA has expanded the PPP to allow proceeds of the loan to be used for and forgiveness to be granted for costs related to covered operations expenditures, which are payments for software or cloud computing services to facilitate business operations, HR functions, accounting functions. And this is likely driven by the fact that many businesses are operating remotely at this time, or they were for a majority of 2020 and will be going into 2021. And so they've incurred costs in bringing their systems in line with the ability to work remotely. The other costs include covered worker protection expenses, so PPE, plexiglass barriers, other expenses that have had to be incurred to bring the workplace in compliance with the safety requirements established by federal and local governmental agencies. The other covered cost deals with purchases of essential business goods and supplies. So covered costs for suppliers of goods and services that are essential to the business. The contract has to be entered into with the supplier before the covered period, other than for perishable goods. Those contracts can be entered into before or during the covered period. And then finally, the last category of covered costs that was added are covered property damage costs, and not necessarily related to COVID specifically, but these are costs related to property damage and vandalism or looting that were incurred in connection with the public disturbances that occurred in 2020. Additionally, just to note, with respect to payroll costs that were previously covered under the PPP, the Congress has clarified that the portion of payroll costs attributable to group health insurance, including insurance premiums, also includes group life, disability, vision, and dental insurance. Previously, there was some questions as to whether those categories were included in health insurance costs. We had taken the position that vision and dental probably were, but it was less clear for life and disability. So Congress has clarified that those are also covered costs for payroll costs.
All right, moving a little bit into the income tax expense area. If you want to put that slide up, Todd, appreciate it. The CARES Act, Section 1106 of the CARES Act, addressed the income tax treatment of the loan forgiveness. And from that standpoint, it said, Congress, we were like, when we read that, we're like, great, Congress actually was proactive here, and they realized that the loan forgiveness would generally be taxable income to the borrower without them stepping in. And they did that. And we're like, well, that's great. What of course happened during the course of last year, then the IRS stepped in and said, well, even though the loan forgiveness is not taxable income, we're going to take the position that the expenses then are related to tax exempt income and they're non-deductible, which in essence kind of puts you back to the same place. And Congress, for all of 2020, right after the IRS came out with that provision, said, that's not what we intended. That should not be the result, and we're going to fix it. Well, they finally did. In the Consolidated Appropriations Act, they came out and reclarified that the income forgiveness is not taxable, and then they went on to say that no deduction or tax attribute or basis increase is going to be disallowed due to the exclusion of gross income due to the CARES Act. And then they added in some more other areas. But what this gives us now is the clarification that we need to say that, okay, the expenses that were incurred in 2020 with the loan, PPP loan, are going to be deductible in 2020, even if you haven't gotten your loan forgiveness already. And then of course, in 2021, when you do get the formal SBA approval of your loan forgiveness, that will not be taxable income. Only thing I'll throw out there is you just think about it. There's a little bit of a potential timing issue that you're going to have to remember, because of course the expenses are deductible in 2020. You're not going to have the loan forgiveness until 2021. So from an income tax standpoint, just make sure you're talking to your provider about what that may mean for you. The last point on the slide is really important also. The CARES Act under Section 1106 only addressed the income tax treatment of loan forgiveness under the PPP program. And as you probably know, under the CARES Act, there were other programs such as Emergency Disaster Relief Program. There was an SBA loan relief program for 504 or 7A loans. That's the one where the SBA said, hey, we'll pay 6 months of your principal and interest on your SBA real estate loans. And the CARES Act never addressed the income tax treatment of that. So up until this point, that was going to be income to the taxpayers. And I'll call it the CAA. I'm just using that abbreviation. It cuts down on saying Consolidated Appropriations Act. The CAA did two things for these type of programs. One, it said, just like the PPP program under the CARES Act, the income is not going to be taxable when forgiven or as we make payments on the loan, like the SBA relief program. And secondly, the expenses will continue to be deductible. And then they also added it in the last point in that slide, the Shuttered Venue Grants Program is brand new under the CAA, aimed at really like music productions, live theater, museums, symphonies, and movie productions or movie theaters. There's a special grant program for them, and the same rules will apply to that. So while this was, as we'll talk about in a little bit, there are some parts of this act that the legislation drafting left something to be desired. And this area, at least they did a pretty good job with being comprehensive. There's probably going to be some things that aren't going to work exactly the way they drafted, or some clarification will be needed, but their intent and what they're putting out here is very broad and very taxpayer friendly. Jennifer, I'll take the simplified loan forgiveness application, and then then maybe you can start on the second draw on that part. But this is another area that is going to be really helpful. If you started to do your loan forgiveness application, you probably have seen that as of today, there are 3 different loans. There's the 30 forgiveness application. There's the standard 3508. There's the 3508 EZ. And if you looked at that, you're like, well, this is anything but easy. It's, there's a lot required of that. And then the last one they added was the 3508S for Simplified. But that one is really a streamlined reporting, but it only applied to PPP loans of $50,000 or less. And all of last year, Congress was throwing out saying, we think, there should be a simplified approach for PPP loans up to a certain dollar amount, larger amount. And the amount they always seem to be throwing out was $150,000. And the CAA puts in that provision saying that for any loan that was entered into or before or after the enactment date, if it's $150,000 or less, the SBA within 24 days of the enactment of the bill has to produce a loan application, and it says it right in the bill, that is not longer than 1 page long. So they're getting very specific. And the information to be provided is really actually minimal for the borrower. They just have to provide a description on the employees they were able to retain due to getting the PPP loan, an estimated amount that they spent on payroll costs, and their loan value. And then there'll be an attestation that, yes, you met the original PPP loan application requirements, and then you're going to keep your employment records for 4 years. And that is it. So if you have a PPP loan of under $150,000 or less, and you haven't filed your loan forgiveness application yet, our recommendation is just to sit tight and wait for that shorter form. Now, again, it says 24 days, and under round 1, there were things that the SBA was supposed to do by a certain date, and they didn't always hit those marks. I don't think this one will be that challenging for them, because I think they can take the 3508S form and rejigger it a little bit, and hopefully we'll see that form by the end of the month.
Yeah, Greg, I would just add to it. It appears that the CAA or the provisions of the simplified application for loans under 150,000 really isn't an application necessarily. They refer to it as a certification that the borrower must certify certain things and then attest to the certification and that they complied with all the PPP requirements. The Act includes specific language that no additional application or documentation is required to be submitted. So it appears that it's really not an application that must be submitted and then approved. It's more of a certification and guaranteed loan for forgiveness for those smaller loans.
Yeah, Jennifer, that's a good point. It'll be interesting to see, once they put this out, it's like, what is this really going to go through? Is the lender really going to have to do anything with it? Does it even really go to the SBA for any type of approval, or is it like, no, complete this, and who are they going to send it to, the lender or the SBA? But
Right.
all that rigmarole of tracking your payroll and wages during your covered period, or going back to a reference period, that's a good point. That's all going away under this approach.
Yeah, and I mean, just another thing to note is that even the loans under 150,000 may still be subject to SBA audit, based on eligibility for the loan in the first place and compliance with the loan program, fraud, those types of things. So Obviously, once you have the forgiveness, but there is a potential that those, if the SBA sees something, that there is a potential that it could be audited. The other thing I would note some other key changes in the Act to loan forgiveness generally is that the amount of an EIDL advance will not reduce loan forgiveness. So if you recall, the Economic Injury Disaster Loan Program provided for up to a $10,000 grant to borrowers, but that grant that didn't have to be repaid under the EIDL would reduce loan forgiveness. That's gone away, that's been repealed. So you can still retain that grant and not have it reduce your loan forgiveness. And actually the SBA has 15 days to issue rules to ensure that borrowers that have already received loan forgiveness will be in the same position, so that if you've already submitted your loan forgiveness application, you've been approved, and your forgiveness amount was reduced by the EIDL advance, the SBA has to go back and basically make you whole again for that advance. The other thing too is just there's been a slight clarification on the covered period itself. So previously, the borrower was required or chose from an 8-week or 24-week covered period. Now the covered period is any period ending during the 8 and 24 weeks. So if you use your loan proceeds in 10 weeks, you can choose that as your covered period. And that's impacted by the reductions to loan forgiveness provisions, that if you've reduced wages during the covered period, your loan forgiveness could be reduced. And there was some questions if you use your loan proceeds in 10 weeks, but you chose the 24-week covered period, if you reduce wages after that 10 weeks, that you could be hit with a reduction on loan forgiveness. So that's been clarified, that you can select what your covered period is. It doesn't have to be 8 weeks or 24 weeks. It can be any period in between that.
Yeah, which, like you said, Jennifer, should, hopefully just about, allow the PPP one round, if you're picking the right covered period and from a wage standpoint, and with the expansion of covered expenses, hopefully that gets everybody to the point where you're getting 100% loan forgiveness, and then for some people, the only thing you're still worrying about, depending on your loan size, is going through the economic uncertainty test, which hasn't went away.
Yeah, and related to that, I think a lot of borrowers are now completing the loan necessity questionnaire that has to be submitted with the forgiveness application, and kind of just trying to understand how that is going to impact their forgiveness and the audit process. We still really don't know that yet. The SBA hasn't really issued any clarifications on that as of yet, but one thing that the Act does provide is that the SBA is required to issue an audit plan to certain Senate and House committees within 45 days. It's not really clear if that is going to be made accessible to the public, but at least they have to start coming up with some plan.
That's one where if we want to take a bet on that, I get to go first and bet that the SBA doesn't get it done within 45 days.
Always take the over, right? In this environment. Okay, I just want to break for a second here. I see a lot of stuff going on in the chat room. So if you're watching this online, you're watching on a cell phone, make sure you find out how to see that chat room. A lot of good questions going in there. Special thanks to Terry for manning that. There's a lot of complicated questions. So thank you for humoring me for a second. Jennifer, Greg, are you ready to go on to the number one item, and that's PPP round 2?
I think we are.
Okay, I'll get a screen share going. There we are.
All right. Jennifer, I'll go first. I'll cover this one and you can chime in on any comments. And PPP second draw. So the bill provides funding for, I'm going to round numbers, $380 billion of additional funding under the PPP, and most of it is to the second draw program. So again, by second draw, what this means is for borrowers who took a first-time PPP loan, they are eligible for a second draw we'll talk a little bit more because the questions are coming up as far as, well, what happens if I didn't take a first round PPP loan? What can I do now? And that's our second bullet point. Jennifer and I will talk more about that. But for the most part, the second draw, a lot of the rules that were covered in PPP 1, where all they really did was, they took PPP 1, put it under SBA as paragraph 36, and PPP second draw is a new program, and it's paragraph 37 under the SBA 7 program. We're assuming because of that, a lot of the general SBA funding rules are going to apply to this program just like the first one. But I'm sure as guidance comes out, we're going to find a few nuances. But what we do know is that, under the first round, you had the 500 employee limitation. For round 2, second draw, they've cut that back to 300 employees. And again, when you're testing employees for this, it's all employees. So someone who's part-time or full-time is counted as an employee. And they did keep the exception in for NAICS 72. So kind of like the restaurants, hotels that have multiple business locations, they have the 300 employee exception for that. So as long as you have less than 300 employees at a physical location, you can borrow for that. They put in there also that you must have received and have used or will use your full amount of your first PPP loan. That's kind of how the language reads. It doesn't say that you had to have filed your loan forgiveness application already, but it again says you have used or will use all of your first PPP loan. This wording, Jennifer, and you can chime in too. This wording is kind of strange because it says you've received a first-time PPP loan under round 1. So the question that's kind of coming out is, if I'm a first-time borrower, meaning I never borrowed under the first round, I just decided not to, or maybe I wasn't eligible for some reason, or I just didn't, and I can borrow now, do I have to borrow under the second draw provisions of the program, which are, of course, a little more restrictive? Or can I borrow under the first round rules, which again have, they have their own restrictions, but they have the 500 employee rule and there's less restrictions on the gross receipts. So I've Jennifer and I have both read the act, and we've read a lot of stuff written by other people, and I think it's one of the areas that might be, needs some clarification. Jennifer?
Yeah, I mean, obviously it's a large bill, and there's I think, Todd mentioned at the beginning, there's a lot of cross references and back and forth, but if you track the language of the prior amendments to the CARES Act and the appropriations language under the new act, it does seem to suggest that, one, you are eligible for a second draw loan if you've received and used or will use your first PPP loan, but that also the ability to borrow under the initial PPP provisions has been extended to March 31st as well. March 31st is kind of the deadline for applying for the second draw loan. But the act seems to suggest that a borrower that has not previously received a PPP loan can apply under the rules that were applicable to the initial PPP round of funding, which was the 500 employee test. The other thing I would note with respect to the second draw loan requirement and the 300 employee test is that it does not appear that the new provisions related to the second draw loans apply to what was defined as a small business concern under the Small Business Act. And that was based on the current SBA regulations for size tests based on your NAICS code. So under the first round, certain borrowers that had an NAICS code under the existing SBA regulations that provided for a larger number of employees could receive a PPP loan even if they had more than 500 employees. the second round rules seem to suggest that that does not apply, that you must satisfy the 300 or less employee test.
All right, let's back up a second, and I'm going to screen share again because there's a good question here from Robert. Just to be super clear, I think it's important. What are the rules for PPP2? I see one of them up here, 300 employees, unless you made an exception. We believe you have to have gotten PPP round 1, but maybe you could go back and still apply for PPP round 1. And then the one that I think is a little confusing for people, this last blue point, I think on your, Jennifer, tell me if I'm reading this right, 25% reduction in gross receipts. So that can be a little confusing, but in a 2020 quarter compared to that same quarter in 2019. So if it was third quarter 2020, compare that to third quarter 2019, or fourth quarter to fourth quarter, or second quarter to second quarter. Those would probably be the most applicable, right?
Yeah.
At least have to do those 3.
The borrower is able to select which quarter that they're going to look at.
And that's probably
your
the
choice.
biggest. Oh, that's probably the biggest thing. There were some early writings were going on that's saying you had to meet that test for every quarter in 2020, and I, as the law is written and what we're looking at now, it's like as Jennifer said, you just test it on any quarter. If you can have any quarter in 2020 where you have a reduction of at least 25 gross receipts, you would be eligible for the second draw. So now the question, as we have under there, which some people are starting to ask, it's like, well, how do you define or determine gross receipts and what items are included? It's like, okay, the act did not provide any guidance on that. And of course, we don't have anything to look back to because this was not a test on the first draw. So we don't know if they're going to say use financial statement gross receipts, work off of your tax return. Is it all gross receipts that are very broad and including, any benefits that you received under the CARES Act in 2019? That's going to be really important. And I think Jennifer had said before, actually, I think we're probably at the 10-day mark. The SBA was supposed to issue guidance around PPP Draw 2, preliminary guidance within 10 days of the enactment. Well, we're there. And again, if you go out to the SBA website, there's nothing there yet. So, we're kind of monitoring that and watching that, not even every day. Jennifer and I would go joking around. We probably both have been on the SBA website 4 or 5 times today. Is it there yet? Is it there yet?
If we had a nickel for every time Congress said, do this right away, and the rest of the government's like, yeah, whatever, we'll get to it. Give us some time. We'd have a lot of nickels. All right. Greg, where are we going next, my friend?
Yeah, let's go to, so the last thing, probably on that is, let's go to the second draw calculation. And Jennifer, if you want to go over that, and just as we're going through this, keep in mind that the maximum loan amount under the second draw is $2 million. So whereas under the first round, it was up to 10 million. This one, it's a $2 million maximum. But Jennifer, you want to go over the calculation?
Sure. Yeah. So it's going to be the lesser of your average total monthly payroll costs incurred or paid during a period, which is at the election of the borrower, either the 1-year period before the date on which the loan is made. Obviously, at the time of application, your loan hasn't been made, so most likely that's going to be as of the date of your application, or it's the calendar year 2019. So your average total monthly payroll costs incurred or paid during the 1-year period before the loan or the calendar year 2019 multiplied by 2.5. or $2 million, as Greg mentioned. So it's a lesser of those two. So the cap is really $2 million. For borrowers having NAICS code 72, so hotels, restaurants, hospitality entities, the multiplier is 3.5 times, but the cap is still the $2 million. They clarified the rule or the calculation for seasonal employers also. So now for seasonal employers, they calculate their loan amount based on any 12-week period selected by the borrower between February 15, 2019 and February 15, 2020. I think that, I mean, that kind of covers the calculation. There's some different rules. I mean, if you didn't exist during the 1 year period before February 15th, there's some rules that apply, but generally that's the calculation now for calculating the second draw loan.
Yeah, and just maybe note, you know, as we talked in the beginning, the covered expenses are much larger. Again, you know, a lot more non-payroll costs. In this, you still have the requirement that you have to spend at least 60% on your payroll costs to be eligible for forgiveness. But again, as Jennifer mentioned before, the covered period, you know, can be fairly long, and you get to really be intentional on what you pick with your covered period. So again, hopefully there's a pretty good expectation that PPP second draw borrowers would get full for loan forgiveness, but you still have the 60% requirement. And
the other thing too, I guess I would add is with respect to the caps, if you recall, the cap under the first round was 10 million for borrowers. The SBA subsequently issued guidance that capped the aggregate amount of all loans that a borrower together with its affiliates could obtain at 20 million. This act does not address, and it's not clear if these second draw loans will be applied to that overall cap as well. So, you know, that impacts companies that, you know, may have, you know, other entities under common control that receive PPP loans as well. And when you look at them on a combined basis with their affiliates, they were subject to an overall cap, and we'll have to wait for the SBA to I guess resolve that or address that specifically.
Well, let me ask a quick question here, because it's coming up a couple times in the chat room, but I don't know about every of the 700-800 people we have online. I don't want to calculate what my payroll was for the last year. I've got a company that does that, right? So Wipfli, ADP, Paychecks, are they kind of working around the clock to get us reports so that we can push the easy button? Or where are y'all seeing?
yeah, I would, you know, Todd, I think, you know, along those lines, you know, especially, you know, if someone's picking the 2019 calendar year for those payroll costs, odds are they probably have pretty good access to that information through their payroll provider, because everybody's kind of in the process right now of getting that together for their annual reporting. And then the only part you're really then working to add in is the health and retirement cost, and the other part which will go into that. Now, if you're looking to do saying, hey, I want to use my average 12 months prior to the loan application, which, you know, you could say, well, gee, that seems counterintuitive, because that's going to include, you know, and in some cases, that's really going to be your 2020 payroll. And, you know, let's say if you, or most of 2020, and again, we're going through the pandemic, for most people, monthly payroll costs probably went down. But if you're going to go with the prior 12 months, that's probably a little more work. Again, I don't think that's going to be the most common selection, but it could happen.
I would also note that the requirement or the cap for compensation, individuals with compensation of over $100,000 continues to apply with respect to calculation of payroll costs for both the loan amount and for your forgiveness.
There's a question in here that I'd like to bring up from Mary Kay. Did someone say loan proceeds received in Q2 are to be added to gross receipts, so that when we got PPP round one, is that part of gross receipts or not?
We don't know. And that's what, you know, that Todd, that's one of the items that are out there. We don't know what's included in gross receipts. And we're hoping the answer will be that, you know, PPP loans that we got in 2020 will not be included in gross receipts. Other parts of the act, they provide where there is a gross receipts testing, like in the shuttered venue area, they said, gee, when you're testing your reduction in gross receipts, you don't include benefits received under the CARES Act. So we're hoping that the guidance that we're all going to be waiting for when they issue it and say, okay, in determining your gross receipts, do this, but subtract this out. But again, the act, has no definition of gross receipts in it for this area. And another thing, which again, I think is also, for anybody out there who files a Schedule C, you probably remember the first time around, there was, we had to wait quite a while to find out, well, how do Schedule C borrowers compute their borrowing base? We have the same thing here. In the act, they provided, and I'm not sure why, they provided guidance around Schedule F, which is for farmers, on what their borrowing base looked like, but they didn't put anything in for Schedule C filers. So, we're gonna, it's kind of, that's one of them where I'm sure Terry's getting a lot of questions. What about Schedule C? And his answer is going to be, oh, we need guidance. And I think there's a good expectation that it would be similar to round one, and maybe they'll do the exact same thing. They'll say 2.5 times of your 2019 Schedule C or your 2020 Schedule C at your pick. But again, we're gonna have to wait for guidance.
Yeah, they're getting into the weeds in the chat room here, Greg. Well, but this is a good one. If you're, is it when you're including the medical costs, is it employer paid or does it include employee paid? There's all of these fine details. Those are things we just don't know.
Well,
Yeah,
I think the rules haven't changed in that respect unless they were specifically changed by the CAA. So it is only the employer portion, same for retirement benefits. So I think what you followed under the initial PPP for those very specific calculations and what was included for payroll costs and that type of thing still continue to apply for the second round as well.
Oh, that's helpful.
The other thing, which I think, we've been kicking around, of course, in round one, there was, a lot of discussion. You had to meet a certification, number of certifications on your loan application. One was you had to certify that you had economic uncertainty, which caused a lot of concern for a lot of borrowers. And then, of course, at some point they came out and said, okay, for loans under $2 million, we're going to deem the economic uncertainty to be automatically met. Well, of course, in this second draw, the maximum loan is $2 million. We have no idea if they're going to take that FAQ away and say, no matter what your dollar amount is, you have to certify economic uncertainty. Because if they left the FAQ in place, well, then everybody would automatically meet that because the maximum loan is $2 million. So we're kind of watching for that too, and what the certifications will look like on the loan application.
Looks like Jay Stout just posted a book in the chat room, so thank you for that. There's a lot of detail now, and they're good. Well, let's keep the ball rolling a little bit, and then we can jump back to PPP2 questions. Let's talk real quick integration of the employee retention tax credit. I have to admit, I am a headline reader these days. I didn't dig in. This is kind of new to me. Probably must not have qualified the first round. Tell me what it is. And how does it interplay with PPP round two?
Yeah, I'll start off, and then anybody wants to jump in. So the employee retention tax credit, again, Todd, you're right. For people who took a PPP loan, to be honest, it's like they didn't really pay any real attention to it, because under the CARES Act, if you took a PPP loan, you could not claim the employee retention tax credit. But to kind of go back a little bit on the background or basics, the employee retention tax credit said if you had to go through some hoops, but if you were a qualified employer and you had paid wages between March 13th and the end of 2020 to a qualified employee, you could take a credit. You were eligible to get a credit against your payroll taxes of up to $5,000 for an employee. And it was 50%, a 50% credit. So another way to say it, as long as you paid $10,000 of qualified wages between March 13th and December 30th, you got to take a $5,000 credit for that employee, and you could actually get advanced payments along those lines. Now, again, to be honest, very few of our clients were doing it because most of our clients got the PPP loan, and they said, well, no, you can't do both because we consider that a double dip. Well, the CAA does a couple of things. One thing is they say, we're going to change the rule, and now retroactive under the CARES Act, if you took a PPP loan, you are now eligible to claim the employee retention tax credit for 2020. And number two, they extended the employee retention tax credit out 6 months to June 30th of 2021. And they changed the benefit, made it more lucrative, and added some things into that. But really, for these purposes, now the first thing is, okay, well, now that I'm eligible for this credit as a PPP borrower, what the heck do I do? And the first thing is, in the act, they also put a provision in that said, okay, you're eligible to claim both, but you can't claim the same wages for PPP loan forgiveness and for the employee retention tax credit, which, this is a nice change, but throwing this in on December 30th, when most people are already, a lot of people have filed their loan forgiveness application and they've done a lot of things, it's causing a lot of uncertainty on how do we go back and figure out if we're eligible for both the credits. And if we are, there's also, some big questions on how do you heck to even claim those credits for the prior quarters. So I'm going to stop there, and Jim or Jennifer, if you want to jump on into anything more on the, it's like, hey, don't forget about this piece on what you qualify for.
No, I for purposes of this call, I think you've covered it, because, we could do a whole hour just on this credit itself, so.
I would say if you haven't filed your loan forgiveness application yet for PPP purposes, and you think you're eligible for the employee retention tax credit, I would say hold off. I know you've probably been hearing that from your tax advisor for the last 4 months. Don't file, hold off. But I think you're probably seeing every time someone says that, a couple of weeks later, something's changing. Like now we're getting the simplified loan forgiveness application, and now you're like, well, you're eligible for the employee retention tax credit, but now you have to go through and look at the calculation to see if you're eligible, and what can you do to make sure that you're documenting that you're not using the same wages twice. Is that, what you put on your loan forgiveness application, is that going to be important in supporting that, you're not using the wages twice? And again, the SBA and the Treasury have been mandated to put out a public information campaign in this area. This one, they didn't put a date around, so I don't know when that's going to happen, but, stay tuned, more to come. And again, just remember I know everybody is really anxious to get PPP round 1 done, but you have 10 months from the end of your covered period to file your loan forgiveness application before the lender can make you start making principal and interest payments. So for most PPP borrowers, it's like you got some time yet before you have to file your loan forgiveness application. But there's COVID, PPP round 1 fatigue. People are like, I want to be done with this and get my SBA letter. But again, if you can manage to wait a little bit longer to take a look at the 2020 retroactive benefit of the employee retention tax credit, I think it's worthwhile.
Okay, you probably talked about this, and there's so much information that's going over my head, but the employee retention tax credit, sales have to be down by a certain amount to qualify for that?
Correct. So for 2020, they didn't change the rule. So it's two things. Either your gross receipts have to be down by 50% on a comparative basis quarter to quarter, or you have a mandatory shutdown. So there's two things. It's like, okay, maybe under a state or federal rule, especially if you're a non-essential business, you know, if you were required to be shut down, then the wages that were paid during that period are automatically available for the credit, even if you don't have a reduction in gross receipts. So there's a couple different ways to qualify. The wages that qualify differ whether you have 100 full-time equivalent employees or under. There's different rules there. So it's a really complicated program. And again, you know, for everybody who took a PPP loan, it's going to be a new education. So, you know, reach out to your service provider or your payroll company, because even if you weren't doing it, there probably were companies that didn't take the loan or weren't eligible, or you know, from that standpoint. And again, you know, at Wipfli, our payroll group has been working through this all year long, because not everybody got PPP 1, but for a lot of people, it's a brand new program. And then the other part is, as I said, in 2021, they extended it out, and they made it easier to use. That 50% test got changed to 20%. The 100 employees went up to 500. The credit went up to $10,000 of qualified wages per quarter instead of per year. So, you know, still have to be, you still can't double dip on the wages. But you know, a lot easier. It's going to be a lot easier to work through it on a prospective basis. The hard thing is going back to 2020.
It's going to keep us all busy and employed for the next 6 months. Let's go. Come up with some more rules. I'm kidding.
Who needs a traditional tax season anymore? Congress takes care of it.
Hey, Jim, well, you and I were going to talk about some of the other stuff related to real estate. And I just want to make a quick plug for Jim Wipfli and other people. One of my friends took advantage of a tax thing he heard about on our show here through Jim and some other people, and saved a lot of money. So this stuff kind of works. Pay attention. Jim, what are the other things we should be talking about?
Right. Well, thank you, Todd. In addition to the PPP and some of the clarifications, there were some really important tax provisions in the CAA. The first of which is the meals deduction. Now, business meals now will be 100% deductible for the next 2 years, beginning this year and going through the end of 2022. So to the extent we can get back into restaurants, if your state's not shut down, you're able to deduct 100% of your meals going forward. Another very important provision has to deal with the 179D deduction, which we work with most, if not all, of our real estate developer clients and a big number of our construction clients. 179D is an energy efficient deduction. For commercial buildings, you're entitled to take $1.80 a square foot on the building. So if you have a 200,000 square foot building you built, you get a $360,000 deduction, provided you meet certain energy efficient requirements. And given the efficiency, the way buildings are built today, we have a very high success rate of getting that deduction for clients. That has been permanently extended. So it is law going forward. You know, historically, we've had to wait year to year to year, but now that's in place. And typically we will do those along with a cost segregation study. A lot of people, listening in have done cost segregation studies, and surprisingly, quite a few have not done 179D or haven't even heard of 179D. But this is just icing on the cake when you do a cost segregation study, and it's a huge tax saver, increases your cash flow. It's something that if you're building new or doing a substantial renovation, you should really take a hard look at doing. It's very inexpensive to do and results in a really nice tax savings. A second provision that was only extended for 1 year was 45L. 45L applies to multifamily housing that was ground up new or substantial renovation, 3 stories or less. If you meet these energy efficient qualifications, you're entitled to a $2,000 tax credit per unit. That is a big number. So we've done that for a lot of our clients that have built that type of multifamily, and well, it's easy to do the math. So that was extended for 1 year. Normally you have to wait till the end of the year to find out if this one's in or not, but it's in. So if you have that or going on, please, you should look at taking advantage of that. And if you haven't taken advantage of it in the past, same way with 179D, you can certainly go back and do that as well. And then last but not least is the new markets tax credit for those who take advantage of that. Good news, that's been extended for 5 years through 2025. So these are very important, very pertinent to our audience here. We would be remiss if we did not bring those up and tell you about those. And if you haven't heard about them, please look into it because they can save you taxes and increase your cash flow. So those are the main ones.
Nostradamus has been saying now for like 2 months that we're going to have a decade of decadence. I don't know if you remember the Motley Crue album, Decade of Decadence. I've been a kid of the 80s. The 80s was great. We did stuff. We got out and we were active. I see it coming back. And you know what's going to be a big part of that is 100% deductibility of business meals. Two martini lunch, Jim.
You know, it's really funny how many people have brought that up to me. I can deduct 100% now. It's just like, which is totally awesome because hopefully if it stays shut down, when it opens up, you can go back and just, help out those local businesses. And yeah, I think that's a great deal. So
entrepreneurs, rev your engines, because when the vaccine takes over and all this goes away, we're gonna be rocking and rolling. So we've got 4 minutes left. I want to hit the chat room hard. I'm going to page through it. Jennifer, Greg, Jim, if you'll kind of scroll through it, pick out 1 or 2 things we want to get out of here quick. If you're an attendee and you really have something hot, there's a button to raise your hand. Don't ask me how it works, but I know I can call on you if you do. Yeah, this is a lot. Anything anybody wants to grab here off of here quick?
I think just a couple of easy ones. I mean, there's a question about whether round 2 will be subject to loan forgiveness. Yes, I think we touched on that as far as, the covered costs that can be eligible for forgiveness. Your covered period can be any period during the 8 to 24 weeks. Let me see. I mean, I guess
slide. Yeah, if you want to know about the slides being available, email me. I'll put my email in the chat room. But it's going to be on YouTube, so you can watch the whole thing again, including the slides.
Todd, there's a question on the 504 loan forgiveness where in the slide I mentioned, again, the CAA made those payments for, not to be taxable to the party. And the question was, are you saying, well, we get 6 months under round 2? And the answer is no. The way they're doing it is the original program was 6 months. And then under the second program, depending on your situation, you can get added up to 3, 5, or 8 months. So the longest it can be overall for the total program would be 14 months. But again, I think in most cases, people might get a 3-month extension. But again, it's a tiered thing. So you have everybody got the 6 months under round 1, but now in this round 2 under the 504 loans, how much you get, it varies depending on your circumstances.
Okay, while y'all are still looking there, we got 1 minute left. I got to make a quick plug. Our biggest event of the year is tomorrow morning, 8 a.m. Dr. Dotzer is going to kick us off. Your email inbox, frankly, should be full with promotions for this. If this is news to you, you're not looking at your email from RE Journals, but Dotzer's one of the best economists in the world, especially when it comes to real estate. He's going to tell us what to expect in 2021. Then we break off into regionals. Chicago's got stuff going on. Minneapolis has stuff going on. Houston, Texas, Dallas, Texas has stuff going on after that. So find that promo or go to our website, RE Journals. I think I might even have it on here, rejournals.com. and you can find the registration for that. It is free. We've never had a free forecast event before. It's virtual, but there's going to be thousands of people on there watching. If you're missing it, you're missing out. Stop screen sharing. All right. All right, we ready to rock and roll and burn out of here? Any final thoughts?
Stay tuned. You know, for people on the Wipfli side, we'll be issuing more alerts. I'm sure anybody who works with Godfrey Kahn, Jennifer, I'm sure you're reading and writing daily on this. So watch for more developments. Again, we're waiting for a lot of guidance, which will be important. But watch for that as far as the guidance and when the application process actually opens. Some banks may be reaching out to you already and saying you can start to pre-populate things. So that, you know, again, if you're a traditional banker, you may have that opportunity to start to get things together now, so that when the portals open and the SBA says we're accepting applications, you're ready to go. That would be a piece of advice, is like, you know, start working on those calculations now.
Greg, Jennifer, you all are saints for getting through the law and helping us figure this out. If, you know, the powers that be, Jeff Johnson, is willing, we'll have another event soon as we know more information. But wonderful. Thank you, everybody. Again, check that chat room. I'm sorry if we didn't get to quite everything. I'll print off the chat room and keep a copy of it. You can always reach out to me and we'll figure out how to get you the answers you need. I appreciate it. Jim, Greg, Jennifer, the almost 800 people we have online. Thank you. Good luck in 2021. Don't forget about forecasts.
Thank you, Todd.
Thanks,
Yeah.
Todd. Thanks, everyone. Thank you.